everyone. Thank you for very excited for everyone to join and welcome. My name is Edith Yang with Raise Capital. Today, I'm super excited for all of you to be part of the Investor Council partnering with GSMA. I think today I've counted it's 109 days since the San Francisco lockdown, and we are still at home. But again, at least we made it to July 1st. So for the last 100 or so days, there's so much changes that's been happening to the world, to our business, to our economy. Today, we're really excited to have a list of amazing panelists and investors to be with us today from Qualcomm, Telefonica, of course, Raise Capital. But I'm really excited to have an amazing host, Ed with GSMA. So a quick background for Ed. Ed is the Head of Strategy and Innovation for GSMA, and he brings together operators, entrepreneur, and investor, and foster partnership for many years. And Ed, I can't wait to see you in person in Barcelona again in 2021. But meanwhile, I'm going to have you to lead this discussion for the next hour or so. And all to you, Ed.
Thank you, Edith. Real pleasure to be here. I think it's a really important topic for all of us, everyone who's on the call today in the innovation and investment ecosystem. So what's going to happen today? Well, we have about an hour or so of a conversation. It'll be pretty conversational. We're going to cover all the topics that are top of mind right now. So the impact of COVID on the investment ecosystem, on venture capitalists, on founders, on the corporate innovation world. And we have some really amazing guests with us to go through this conversation. So who have we got on? We've got Alfred Chuang, who's General Partner of Raise Capital. Alfred. We have Quinn Li, who's SVP and Global Head of Qualcomm Ventures in San Diego. And Guenia Gawendo, who's Managing Director of Telefonica Ventures in Madrid. A very sunny and hot Madrid, she was telling us just before we came on. So I'm going to get them to introduce themselves, their companies, and what they do in a moment. And just a reminder before we get started, there's a Q&A box. If you look down at the bottom of your screen, you can press the button if you have any questions as we go through this conversation. Please type them in there or in the chat. And we'll get to them at the end of the conversation. Make sure we answer as many as possible. There's quite a few of you on today, so we probably won't get to them all. Anyway, let's not dwell on that any further. Alfred, please introduce yourself.
Ed, thank you, and actually thank you for hosting this, and also our esteemed guests for this conversation. So I'm Alfred Chuang. I'm one of the general partners of Raise Capital. So most of the people know me from founding a company in the mid-90s called BEA Systems, which were eventually taken public and sold Oracle in 2008. And since then, I have started a couple other software companies and also have invested in a lot of startups, over 100 of them. So I'm very excited today to be having this conversation with everybody.
Awesome. And Quinn, please tell us about yourself.
Great, thank you, Ed, and glad to be here. So my name is Quinn Li. I run Qualcomm Ventures globally. Most of you are probably familiar with Qualcomm. We're one of the largest telecommunications companies headquartered in San Diego. We've been pioneering in the wireless cellular technology for 3 decades, and right now we're working very hard to get 5G deployed globally. And as part of the Ventures group, we invest around the Qualcomm ecosystem globally in areas that's relevant for Qualcomm, including 5G, AI, automotive, IoT, and networking. So our team consists of 30 people. We invest in a variety of areas across the globe in 7 different regions. Currently, we have a portfolio of about 150 companies, and we have close to $1 billion under management. So glad to be here and looking forward to the great conversation.
Awesome. And finally, Guenia.
Hi, good evening or good morning. Thank you, Ed, and thank you, Edith, for inviting me and to putting this panel together. Thank you for everybody who has connected. I am responsible for Telefonica Ventures. We are the investment vehicle of Telefonica, who is the leading operator in some countries in Europe and in Latin America, including Spain, UK, Germany, and Brazil. And as a CVC, we take minority stakes in companies that are strategic for Telefonica. Main areas that we are investing are network, IoT, cloud, cyber, machine learning, and also 5G. We also are LPs in 11 funds in Latin America, Israel, and Silicon Valley.
Awesome. So I wanted to start the conversation with the broad question and sort of take it from the top, really. We're now 4 months into this crisis. It's taken a different flavor in different parts of the world. Here in London, I think we've been locked down since March the 23rd, and somehow we're just about sane. But what's the principal impact on the investment and the entrepreneurial ecosystem? How's this played out now? And start with you, Alfred. You know, what are the big trends?
Thanks, Ed. So Raise Capital is actually a new fund. So we started this fund last year. Our principal focus are in digital banking, fintech, infrastructure, enterprise infrastructure, and data and transaction, and then also in collaboration. So for a new fund, this couldn't be a better time, because all new funds, you got to reset when there's a crisis. When a crisis happens, generally we find investment costs come down pretty dramatically. We've seen quite a steep discount in the past 17, 18 weeks. So we have the broad opportunity because capitals are much harder to come by. We see a lot more companies than we normally would. I haven't seen this level of deal flow for quite a few years when the capital was, there was so much capital was flooded in the marketplace. So that was actually very delightful. Also, what happened is whenever you have such a big reset, it really caused, especially in the technology field, people to really rethink what the world looked like in 10 years. So if you look back, what happened in the past two tech crises, in 2000 and 2008, well, 2008 was a financial crisis, but obviously it had impacted tech. We've seen some really dramatic things that had happened. I mean, the last one, cloud, we saw the apps, the whole gig economy, social network. I mean, the impact is huge, mobile. So I'm expecting to see in the next decade, that excitement and those new innovations will likely double of what we have seen in the past combined. So it's a very exciting time for us.
Perfect. And Quinn, I guess it's slightly different corporate like Qualcomm, but what do you think the major impact has been so far, 3-4 months in?
Yeah, I would say we've seen overall, obviously as a team, we're trying to figure out how to do new investment remotely. Obviously, one of the important things is to meet the founding team and so forth. So given the current environment, it's challenging to do. So we're trying to figure out how to make new investment while everything's being done virtual. So we actually closed the investment a week ago, which from the beginning, I think when we met the company was after the lockdown, if you will. So that's one that we're as a team trying to learn how to operate in this new world. The other thing I think we're seeing is the demand for connectivity, as well as broadband solutions, including 5G. That demand just has increased tremendously, given that we all operate from home and in remote locations. So we see a huge demand in connectivity, broadband solutions, and 5G. And obviously, we're working very hard to get 5G deployed worldwide. So what we're doing is we're looking for opportunities, entrepreneurs that have new ideas, new use cases to leverage the capability of 5G. And obviously, things are gonna be we operate a different world. I think the way we operate today is gonna continue for some time. We all learn how to remote work, maybe go to the doctors by virtual visits, as well as education, right? I think we see tremendous opportunities with entrepreneurs come up with new ideas. How do we operate more efficiently, effectively in the new world where many things are done virtually? So we see actually a lot of opportunities in those areas. and very excited to meet new entrepreneurs and founders that come up with new ideas, be able to leverage the capability of the networks.
And Guenia, I mean, probably unique amongst the panel today, such a global footprint, Telefonica, so you must have a wide view across Americas and Europe.
Yeah, it's. I agree with both Alfred and Quinn. I think any crisis brings a lot of new opportunities, and we actually seen this. But it was funny to see how everybody was reacting at different speeds, because countries were quarantined, some others, some later, and Spain was one of the first. So you could see how the activity was still going on, in the rest of Europe and the US. And it was funny because at the first moment, I think everybody's reaction was like, stop. We are not going to do any investments. We are going to just support our portfolio companies. Let's see. Nobody knows what is happening. And then we started to see, as the days and the weeks and the months, went by, and we started realizing that it's going to be a long crisis. We could start seeing, many deals being announced. I think the overall number of deals have decreased. If you take the statistics, last year, the first 2 quarters in the US was like 72 billion in VC. I think this year it was 62. It's a significant lower. And the other difference is that there were more mega deals being closed, less than seed deals. And I think that the reason it's because people were closing deals with companies that they had previous relationships before, and deals that were being, discussed before the pandemic. And we also closed the deal during this week. So we actually signed the papers yesterday, so pretty exciting. And it was a relationship. We did everything in the deal from, quarantined. The first time I talked to that company, it was end of February. So I think the lesson that we take out of this is that, if this continues, we will need to learn, and we will need to find ways to operate and continue to operate in this environment. We are lucky, because we are very familiar with technology. We are used to working remotely. So there are things that we are less familiar with, like meeting a founding team or an entrepreneur. This is something that we need to overcome, but we have to be prepared that we probably won't be able to travel for the next until the end of the year. So I think there will be a very fertile ground for creativity and new opportunities, in investment terms, and always in the way we work as investors.
And Guenia, just coming back to you, I mean, obviously everyone needs connectivity. So in a sense, there's never been greater demand for your product, internet services. But how does that translate into you as a CVC? Are you being more aggressive or more circumspect in your decisions right now about investments?
Yeah, that's, I think Quinn mentioned before that we saw the demand for better connectivity was amazing, what we saw in the last months. I think I have some data here that are from mid-April, which was a month quarantined in Spain. Only in that first month, we saw like WhatsApp volumes multiplied by 6. The increasing traffic in the network from the beginning of the year to April was the same amount that the whole 2019 year. So the volumes of data in the cloud multiplied by 5, more or less. Video IP by 2, the number of contents. So, I think the crisis has proved that having a very robust and strong network is really, really important. And we are very proud of Telefonica to have been doing a lot of investments in this sense. And, I think 5G is a new opportunity, and we will continue to invest in that. And with better connectivity, we'll rise new opportunities, and we will definitely be looking and willing to invest in them. We still have the challenge to transform this increasing traffic into additional revenues. And I think all the telcos are facing the same problems, but I think I think it was Rothschild, no, that used to say, when there is a war out there, buy property. I think we have to say, when there is a pandemic out there, investing digital.
Yeah, it's a good problem to have for everyone to need your product, isn't it? So, Quinn, Qualcomm's traditionally had both a strategic and a financial return in mind through the fund. But does this sort of current crisis have you thinking differently about what your priorities are as a company? Is it business as usual, or doubling down on particular areas of focus?
Yeah, I would say as a group, we've been around, for 20 years. This is actually a 20-year anniversary from the founding of Qualcomm Ventures. So we've gone through a couple of down cycles, the financial crisis, for example, or so forth. I think overall our strategy is to remain to be focused and disciplined in our approach. So overall strategy hasn't really changed. We're both looking, as you mentioned, looking for investment that can generate a good return on investment, as well as it's strategically relevant for Qualcomm. So in particular, this year, I think one of the focus area we're spending a lot of time on as a team is obviously around the areas 5G. The company's got a very strong initiative to get 5G technology deployed globally. We're working with operators like Telefonica and others around the world, and handset OEMs to get the technology deployed. And as the Ventures Group, what we're looking for is we announced a $200 million 5G fund last October. And the idea is really trying to focus on three different areas. One is use cases of 5G. So what are some of the innovative use cases that can leverage the unique capability, the high-speed, low-latency network that's being deployed today? And then the other area that we are also looking for opportunity is how the network is going to be deployed differently than traditionally it's done. So what I mean by that is increasingly you see the networks are being more disaggregated, more software defined, more virtualized. So the networks of 5G deployment, many of these networks are going to be deployed very differently than how it's done in the past. So we think there's a lot of opportunities in the infrastructure front, being things deploy more like web scale companies do things, distributed computing technologies and so forth. So we've seen companies, addressing different parts of the network, companies like Affirm Networks, which is one of our portfolio companies that got purchased by Microsoft. And then there's Altiostar, for example, they're addressing the RAM part of the network. So there's a variety of companies, ideas that's doing, trying to figure out new ways for the network architecture and how it's deployed so that the cost of the deployment is much less than in the past. So those are the areas I would say, use cases 5G as well as network transformation. Those are the key areas we're targeting as a team. We spend a lot of time in those areas. So our overall strategy, I think, remains to be the same. We want to make a good investment, and we want to make investment in companies that's relevant for the Qualcomm ecosystem.
Yes, I spent many years visiting buildings on Sand Hill Road, and people would tell me how much they hated the telecom sector because of the low exit value and just how difficult operators like Telefonica are to work with. So I think that's changing. Software means scale at a much different level. Anyway, Alfred, I wanted to come back to you. Institutional, like Race Capital, you said there's a really great deal flow right now. But are you thinking about evaluating your deals differently, given both the impact of the pandemic on global business, but also the choice that you now have?
And actually, I think when you have kind of a crisis and there's a bit of a reset of how we do things, and in some area, what Quinn and also Guenia has talked about, this whole 5G deployment is very exciting. We're going to have bandwidth literally everywhere on every device. And then the things that we dream of doing with IoT that we've talked about for quite a few years is really going to happen. But as a fund, you also have to transform, I really believe. Especially I think when you have a chance to do a new fund, you got to think of ways of doing it differently. In many ways, I think we'll run this fund so different from anything that I've seen. I've been a limited partner for many, many funds. I've never seen a fund run this way. With one, we run the fund like a software company. So we think like a software company of what we would do in this generation. Like, for example, we talked about earlier, we know that tomorrow every school will be a software company. Well, actually today it's already become a software company. We have no idea what will actually happen in the fourth quarter or fourth semester, how the university students are going to go back to school. It's still unknown. A grocery store will be a software company with robots in there. The biggest entertainment company will be a pure software company. The biggest hospital will be a software company with robots in there. And working from home and decentralization of company is really becoming the normal. I mean, like all companies that we have seen were all through Zoom. We see a lot of them. We have figured out a way how we operate as a firm ourselves. So like one thing that we do is when the entrepreneur hears, they were very excited. Every day at 4 o'clock, we have our own scrum. We have all our general partners get together. It could be a very short meeting, but we talk about all the things that happen. So it accelerates things that we do so much faster, which is very critical. Now, prices obviously has come down. I'm going to guess the range in the seed and a little bit to the A stage is 30 to 40%. Because there's just so many people looking for capital. When you have kind of risk-off kind of scenario, people generally are not going to be so aggressive in investing in a seed deal. So in that case, for us, we'll be able to get much deeper into the deal itself. We actually ended up owning more. That will allow us to get so focused to help the entrepreneur to become successful, which is really the differentiator. People talk about helping them. We are all in for helping them on go-to-market, on finding technology partners, sometimes thinking out of the box of maybe they'd be better off merging with another software company and finding the right people for them. It's actually really exciting. It's almost we blur the line. I'm thinking, like, I'm only picking entrepreneurs that I would start the software company with. So with that means my interest is high to be helping them in whatever they wanted to get done and making sure we give them feedback almost on a real-time basis. Finding the right people in this case is very critical, but we have made investments. And I'm so glad the investment we made are so spectacular. I mean, it's so interesting. Like, for example, we believe digital banking is really going to take off now. They're all going to be embedded inside the application. You'll be able to open bank account, do bank transactions, be able to build new banking services, all inside an app that you never thought of. We have this whole banking services in there because we don't have a choice. Now, with incredible bandwidth coming, we'll be able to do very real-time or close to real-time stuff directly in apps that you're firing off banking transactions or other financial brokerage transactions that you never thought is even happened. You think like it's a shock when you can do things like that. So I think it's a very exciting time coming, especially for investments.
Right, yeah. Perhaps the biggest stimulus for digital transformation we've seen in a decade, and you know what, we can do it quite quickly when we need to. So I wanted to change track a little bit now. So and think about founders, because we talked a lot about investors. So Alfred, come to you. I mean, what do you think founders should think about differently and do differently today than they would have done just a few months ago? What are your top recommendations here?
Well, I think obviously I have a personal portfolio of companies, and their company varies from they have gone public to they are in the series B or C or D stage. For those companies, obviously most of them we have seen a revenue impact. So when you do that, two things is very critical. First, this is going to sound very strange. The first thing I advise every founder to do is to think long-term. You have to have a very clear picture. You say, well, okay, this time will pass, but what would the world be long-term and how will you fit that world? So there's no better time to rethink. Is the strategy you're on really fits the world that is now is a new one? I mean, we talked about in the very beginning of this call, none of us believe we're going back to the world we came from. It's never going to be the same. So you might as well accept it. Once you accepted it, then you know, well, do I still fit? What do I have to change? And once you know that, then you know the current investment that you have, what you don't need. Cash used to be king. Now cash is King Kong. So you have to conserve the cash to really be able to hit the goals that you have for the long run. So that's so critical. I mean, the funds are 10 years long. So you have to have like a 5 to 7 year investment cycle to see it through that it can blossom into a big, big thing. So I encourage every founder to do this. The second thing is for early stage seed to A company, we look for the scrappiest founder. So people be able to do a whole lot on their own. We're all forced to do this now, right? I mean, like my whole world is in front of me on this desk with all the computer and the rest of the tools I have. That's it, So and the rest of the teamwork, I rely on telecommunication tools like we're on Zoom to work with the rest of the people. So it's crucial. These people got to be able to do a lot and figure things out on their own. So the time that people have to go, I have to hire this person, I have to hire that person, those days are over. So if the entrepreneurs cannot quickly show traction, either by producing the product or be able to go get hustle and be able to go get very early traction with some beta, with some customers, we just won't be interested in it. So because generally our first call with the founders is 30 minutes. So if you can't come on, describe your use case, how you're going to fit into the future, and quickly show sometimes a demo, we lose interest because there's just not enough there. So those are the things that I would advise the founder. The ones that's more mature, really think about the long term, think about your costs currently. Does it help the long term problem? I mean, we all know, right? Cutting costs is very, very tough. But the longer you wait, the more it hurts. So those are the things I always advise the founder. Does it fit in the long run? Does it fit in the long run? I hammer into them. And for seed funding, scrappiness and product market fit. How does it fit in the long run? Does it really is transformational? Those are crucial things.
All right, long-term, scrappy, and be cheap. Guenia, just kind of interested in, are there different rules now for playing with corporate? So traditionally in an economic downturn, it's innovation budgets that go first. But is that true now? Is it true at Telefonica? How should the many startups that work with Telefonica think about business now?
Well, I think the relationship, with big companies and small companies is not always the smoothest one. You have to find ways of fitting together. I think, looking at things from a positive perspective and assuming that, you're going to have some difficult times coming ahead of us, I think they also represent an opportunity for startups with creative solutions, because companies will have more urgency in deploying their solutions, so they will be willing to go faster. And there will be a need for everybody and every corporate and every company, not only startups, corporate, but everybody, to generate efficiencies and costs. So there is a huge opportunity for startups to develop their storyline on how they can help corporates achieve this with what some people call recession stories, recession stories lines. So the companies and the startups who are able to change their stories and adapt to the news times, I think there is a huge, great opportunity to be there. It requires a lot of flexibility from founders. I think maybe the budget for POCs and trials in the short term, they may be less abundant. But again, I think there will be more urgency and more willingness to apply and deploy things faster. And I think Alfred mentioned about valuations going down. And when it thinks from a investing perspective, I think it's, I agree. And I think it's an opportunity for founders to be flexible around this too, and things on different mechanisms. We've seen a lot of convertibles and thinking, mechanisms that help postpone the valuation conversation.
Awesome. Quinn, so I just wanted to think about something you said in one of your earlier webinars, actually, which is connectivity is king and online is the new normal. And we kind of all get that now, and just how important the connectivity piece is, and we're online all the time. But is that changing how some of your portfolio companies are building and scaling now? Are there different rules for how you operate one of these portfolio companies?
Yeah, very good question. I think connectivity is certainly very, very important. As a company, for example, as big as Qualcomm, we didn't know how the company would operate when the lockdown happened, right? We have a very global workforce, and then we send everybody home, and then the result is, we actually are able to adapt very quickly, given that some of the tools that we have. It's all enabled by broadband connectivity, right? You wouldn't be able to do a Zoom call or Teams call without this broadband connectivity to the home. So with these technologies, really enables us to collaborate, online in remote, from remote locations, and actually be fairly productive as a company. I think the same goes with startups, right? You gotta, as Alfred mentioned, you gotta have the vision of where the business ought to be. You gotta find the right value proposition to deliver to the end customer. So I think in the new world that we live in today, I think we see, things are gonna be just operate differently, right? A lot of things are gonna be done by remote environment, and that applies to education, applies to work, applies to healthcare. I think companies, founders should think about, in this new world we live in, what unique problems or challenges that presents, and what solutions they can develop to help us all to collaborate more effectively, efficiently. I think there's a lot of problems to be solved in those areas. In particular, if you look at around telehealth, for example, right? I think before the pandemic, there's telehealth visits to doctors and so forth. I think that demand or adoption, you just see an increased amount of adoption over this course of the last few months. People are maybe concerned about going to the hospital. They'll probably just wanted to have a doctor visit remotely. And then in places also, protects the medical professionals from seeing patients maybe have gotten the virus through a telehealth visit. It'll be safer for both sides. So I think we see a tremendous adoption for telehealth. And it's again enabled by the connectivity of the network. And with 5G coming along, those services would be much more better delivered to the patients and for the doctors. So recently we invested in a company called Telcare, which provides the kits for patients to take self-exams. So you can take a video of your throat, for example, ear, you can take temperatures, you can send that information to the doctor. So you don't have to go to the doctor's office to do some of these basic exams. So allows the doctor to have this information, and then you can have a video consultation with the doctor. So some of these technologies, that's both on the device side as well as the network side, I think will enable new use cases, new innovations across healthcare, education, work. I think we see, huge amount of opportunities entrepreneurs can go after. If you think about when the 4G network was rolled out, which was 10 years ago, at that time, services like Uber, Lyft, and other things are not widely available, right? It's really the high speed of the network and plus the smartphone. Both these things combined allows you to have these innovations like Uber, like Lyft, and variety of other use cases. And I think with the current deployment of 5G network, I think there'll be new use cases that people come up with, new applications, ways to solve problems that entrepreneur founders will come up with. I think it's a great time for us all to think about what unique problems we need to solve in this new environment and find some very interesting solutions to these problems.
Great. Well, I noticed a few Q&A questions come in. We'll get to this at the end of the webinar, I think, but keep on asking your questions, and then we'll make sure we leave time. So I wanted to move on to the future. So we talked about the impact now, we talked about the impact on founders, and what does the future look like? And one of the things that struck me, actually, if you look back at the types of companies that were founded around or just after the last financial crash, there's some real rock stars: Twitter, Airbnb, Uber, Tableau, Box, all raising early money around then. Facebook had their first mega round around then as well. So Alfred, do you see early signs that some real good is going to come out of these difficult times? Do you get a sense of what the huge platform companies of tomorrow are likely to look like?
Yeah, well, I think generally what happened when you have these type of big resets, I'm just referring back to the 2000 experience and also the 2008 experience. We're going to bifurcate, probably see two things happening simultaneously. There'll be clearly that the large, I've used the word carefully, the largest tech companies that have the biggest market share will likely be able to protect and expand their turf because it's a clear choice, it's easier choice. So when they sell into large corporation, those enterprise license agreement is easy to add a thing or two into it because then you have less thing to worry about, right? And they already have that relationship with the customer. So from that perspective, it will make the decisions of what you want to go into a little differently. So I'm going to give you an example in a second. And then for the startup, however, interesting enough, brand new ideas, this can turn out to be just a marvelous time of doing exceptional things. Actually, a spin-off of one of the company that I started a decade ago called Magnet Beauty. So they are in actually a specific chat-based, multi-context application for people to, for certified beautician to be able to go through makeup sessions and also like introduce their customers to products and also go through all the pitfalls and the issues and the use of these cosmetic product with people. And it took off like mad after the pandemic. You can imagine all the cosmetic stores are shut down. The department store are now out of business. There's nowhere to go get these kind of advice and actually to try anything. So, but it didn't stop people from buying makeup. Makeup actually still sell very well. And the cosmetic fusion generally, we're terribly prepared for e-commerce. And their penetration is like in the 30-ish% level, which is lower than anybody else. So also to create an opportunity for people to be in that field. So those kind of things are actually, it truly is exceptional. I talked about digital banking earlier. So this has been going on for several years. People wanted to do this. Some apps, really big apps like an Uber, you can open a bank account and stuff, but it's not broadly used by developers to proliferate, putting it everywhere. But now it is, because you really don't have that choice anymore. You can't, the physical contact part of it is gone. And most of the existing large banks, their online services are generally pretty old. So it's waiting for a very easy to use gig economy type interfaces into it. So I think those two things are happening. And then I think then once we know exactly what this crisis entails, how it's going to recover, which we don't know yet, we're still experiencing over 100,000 cases, close to 100,000 cases a day in the US, right? So this is a very, very severe scenario. So we could be actually trapped in this Zoom box for quite a while. So until we kind of get to some level of normalcy, then we'll know what the human interaction and social interaction is going to be. Then we'll know what will happen to those large tech and their foothold. Is that going to be penetrated, or there's going to be some differences? Like, we are looking for deals to invest into collaboration. It's not because we don't have great collaboration tools. Zoom is great. We have many, many companies that are doing stuff that are outstandingly, like Slack and other things. But none of them were designed for us to be completely decentralized and working from home and implement a company process on it. So these voids that are filling in between them, still very interesting technology to go invest into.
Yeah, we've all gone two-dimensional, which is, maybe it's an opportunity for all those holographic interfaces to finally take off. Guenia, I mean, are there sectors, I realize 3 months is nothing really in an investment life cycle, but are there sectors that you get a sense that are going to be stronger coming out of this and that we should really keep an eye on?
Yeah, I think both Alfred and Quinn mentioned before, and I think that what we are saying with this crisis is that some sectors that we have been already talking about for a long time, they finally took off. They took off, and some of them is like healthcare, remote education. I think those are the most obvious ones. There are clear winners, and I think Quinn mentioned before, connectivity is one of them. And new ways of deploying the network and being more flexible, it's definitely an area, because we will need to keep investing in our networks, and we need to find different, more creative ways of deploying networks. We, Telefonica, we are also an investor in AutoStore, so we are a big supporter as a company, of open, virtualized solutions. And I think what this crisis brings is like similar to 2008. We have a crisis which always spikes creativity, but we also had the smartphone was created about that time. So that's why we saw also all these new opportunities coming up. Now we have 5G. You know, we have the crisis, we have the need to innovate, and we have 5G. And besides connectivity, putting all these new collaboration tools in the cloud and managing the cloud, you know, with different bandwidth and that they work faster, that's an area that we think we will grow a lot. And because everything is on the cloud now, then virtualized security and cybersecurity becomes an even more important issue. You know, securing the endpoints, securing the home networks, avoiding phishing, protecting data, new authentication factors. That's another area that we think that it's gonna experience a huge wave of innovation. Also, because digital sales are increasing, all the CRMs and how we manage those sales and those processes, everything virtualized, anything, another area, you know, of great opportunity. And also payments, you know, to close the cycle. I think we will see a new wave of different payments coming up. We are lucky as a telco because this is where everything happens. We need the networks and we need strong networks. And we think with 5G, you know, it's gonna be a wave that we will all ride and create those new solutions.
Yes, I think Chetan Sharma, the analyst based in the US, I'm sure you all know, said there'll be orders of magnitude more value created in 5G. Who captures it is the question. And I think there'll be some new people coming out of this crisis and 5G. So Quinn, I just wanted to think about like where in the sort of ecosystem of investment the opportunities might lie in the future. I mean, is it early stage and scrappy, like Alfred said? Is it later stage and reprice so you can get great value? Should we be doubling down on challengers, or is it the category winners that really matter right now? What's your thinking on this one?
I think we see, we actually invest across the spectrum, so we're stage agnostic. So I think we see opportunities in the early stages. We see companies in mid stage as well as growth stages, right? So I think for early stage companies, your key focus, as Alfred mentioned, is what problem you're trying to solve, what's the vision of the company, right? In this new environment, I think you got to come up with new ways of solving things that allows people to, you know, operate in this remote environment and maybe operate more efficiently. To Guenia's point about how do you leverage the 5G capability. So there's, I think, a variety of things that the entrepreneurs can come up with in the early stages. So I think there's tremendous opportunities there. For growth or late stage companies where you already found a product market fit, for example, then I think it's about how do you scale the business efficiently, right? Now you gotta adjust to how do you work first, you know, with people in our remote locations, like we had to learn how to do, both from a, you know, big Qualcomm perspective as well as our team. So I think for startups, no different, right? They gotta learn how to operate efficiently in this new world. And then how do you scale the business efficiently, right? Maybe you'll not be able to meet the customer in person. How do you effectively close the sales deal, for example, just via doing a Zoom call, right? So I think for mid or late stage companies trying to adapt this new world to figure out how do you scale the business as quickly as possible, as effectively or efficiently as possible with the constraints of, you know, maybe a lot of people travel and so forth. So I think we see, you know, opportunities on both across stages of companies. And then to Guenia's point about, you know, cybersecurity, we also think cybersecurity is a very important area, both from, you know, now the network's even more distributed. People are working from home with their machines and different, you know, devices. So that's very, very important to secure these endpoints. But if you think about also 5G, what enables is also not just the smartphone, maybe it's a laptop, maybe other devices is also enabled by the network, you know, the Internet of Things, if you will. All these devices are also needs to be secured, right? Whether it's your refrigerator or other things, and especially in the automotive case, right? The car needs to be secured if it gets connected. So I think the cybersecurity is one area that I think is pretty important, very, very important. It will become more important as we go forward, as we have more and more of these connected devices. We recently invested in a company called SentinelOne, which is addressing the endpoint security problem. And they're looking at how to, take their technology that's currently maybe deployed on laptops to these IoT devices across the different verticals. So I think we see opportunities really across the spectrum in all stages of companies.
Awesome. I'm going to take a few of the questions from the Q&A, and there's no preference here, so whoever wants to answer, and then we'll go to some final questions before we close. So an anonymous attendee says, do you suggest Western startups, scale-ups address China these days, and if so, and how? It seems China's coming out of the pandemic. Anyone have a view on China?
So I'll give it a crack. So yesterday, the government of Hong Kong, I was born and raised in Hong Kong. So yesterday, the Hong Kong government, through with the parent country, which is China, released the details of the new national security law. And my phone's been ringing off the hook that the reporters and other people are asking, so what do we do? What do we do? What does it mean? So there's no doubt. I think this is a very interesting time between the Sino-US relationship. There's a lot of tension. There's no doubt. It started with the trade war, and then I remember we're going into the election season here. So a lot of it is also impacted by the politics of it. It's I would say, be cautious. As you already know that we have CFIUS, so it's difficult for any of the Chinese or Chinese state-related entities to invest in any American businesses. So reciprocally, we don't really have exactly that law, but we will not be surprised that some restrictions is going to happen. And going to China, China is the world's second largest economy, and also their go-to-market is very focused. It's a market to be reckoned. So, like we talked about 5G all morning. 5G, the biggest proliferation of 5G right now is in China, right? And they're the fastest adopted to all this stuff. So it's a market that you imagine if the chipset they already adopted, how could they not adopt the rest of the telecom stack, the rest of the computing stack, and the rest of the software stack? So it's automatically give us a huge hope that we have huge opportunity in there. But China is a whole different beast, right? So we have our own software stack here that we normally use. You go to AWS, you have GCP, and then you build stuff from there. China is different. You have to pick whether it's a Tencent stack or it's going to be an Alibaba stack. And those things typically come unaware of the people in the West to say, oh, really? And that's a whole different deal. You will have to start from scratch, right? And all that go-to-market is so very differently. They have a lot more control in those companies. So having a great level of understanding, knowing where all the challenges may be, is going to be very critical upfront before you just say, well, this is the world's second largest economy, let me just go focus there blindly. That wouldn't be smart anymore. Plus now we can't go there, we can't travel, right? I mean, like, especially from America, because, our cases still growing so rapidly and they're not, right? So why would they want us to be there? So it's understandable. So we have to be very careful.
Yes, I think American travelers are banned coming into most of Europe at the moment, but Hong Kong residents are welcome into the UK, apparently. A new announcement today you may have seen. Moving on, Guenia, a question from Chris McCann here, who's asked a few, and so we'll go through them. He says, what's the impact been on startups trying to do proof of concepts with corporates? Has this slowed down as well?
I think I've mentioned it before. I think in assuming that we are going to come to you're going to be facing some difficult times, in the next month and probably year. I think all corporates will need and have more urgency to look for ways of innovating and finding efficiencies. And I think this is a great opportunity, especially for startups that can deploy quickly and easily integrated. Having said that, and being more realistic, there will be less money available for POCs and all of this. So we need to be creative and find ways of, making this collaboration effective for both startups and corporates.
Yes, and the challenge is always with corporates how to go from the innovation or the investment unit into the business units and to make that transition. And it's super hard, or it's not unique to telcos at all. This is unique to all big companies, and Telefonica are probably one of the best at making the bridge.
I'm helping because we only invest if we make the bridge before. You know,
Yeah.
we only invest if we have the business committed to working with the startups, and we have learned this the hard way. Huh? We've done some mistakes in the past, but we have learned that it's better this way. And I think for now there will be more areas internally in the corporates willing to take the risk and go for startups because they need to find different ways and they need to find efficiencies. And 5G, of course, you know, if anybody has new 5G solutions, we would love to hear about them.
Thumbs up from Quinn. Quinn, so another question, public markets have been largely corrected already. Depends where, but yes, we've seen some bounce back in the US. Does this look like a V-shaped recovery? And if so, will the startup side of things go back to normal as well? Are we bouncing back to normal, or is the world changed forever?
I think world is changed for sure in terms of how we do business, for sure, at least until we find a vaccine, right? Obviously, the public markets has corrected quite strong, led by, I think, a lot of it is by technology companies. If you look at certain industries like travel and so forth, those industries are still probably struggling right now. Usually, the private market, like startups, lags the public market because in public market, you can trade stocks very fast. Private market tends to lag the public market. So any sort of valuation correction, if you will, and things, they don't happen instantaneously. It takes time. So I think, as the broader economy gets back to normal, I think the world of startups obviously will back to normal as well. But the stock market itself it's a little bit different, right? So it's I think it's mostly led by technology companies, the recovery. I think certain sector of the economy is still having some challenges, like restaurants, travel, and so forth.
Yeah, I think so, and it's playing out differently across different territories. Of course, the recovery may not be strong everywhere, and how each country deals with the pandemic will impact the economy as well, I'm sure. Alfred, you mentioned earlier that you'd seen a 20 to 30% reduction in valuations, and typically you invest at an earlier stage. I mean, is that true also at later stage companies? So have you seen that around the investment ecosystem, that the valuations are coming down?
Well, later stage is a whole different beast, right? Because what happened is you have a bunch of existing investors. Generally, those investors were, they have very deep pockets. They have raised a lot of money. And they look at those investments very differently. They look at those investments as, I'm already so far into these deals, I just can't let them fail. So they will have to put capital in it for them to weather through this time. So in those kind of deals, generally, they will do it for a note, and then we'll figure out what the valuation would be when all the dust is settled. One of the things I do want to go back to, which is between this public and the private marketplace, is very different. I mean, we look back into the .com era, it's all public, right? So we have a lot of small hedge funds. They can participate in an IPO with really just a few $1 million kind of investment. Now it's not the same. Hedge funds are very large. So for them to take a position in anything, they really will have to invest a lot. Hence, the hurdle rate to become a public company is difficult. Now, obviously, all sorts of money eventually come from the same place. So if they get hurt in the public equity marketplace, they will do less in the private market. However, most of the past 12 years and 8 years of huge technological boom were funded in the private marketplace. So that, I think, all you will likely see is in the later stage, they will have to sustain those kind of investments because they already have so much in it. The earlier stage, you have to be so much more picky. Now, the good news for an investor is not just the prices coming down, is now it's much easier to see the really differentiating technology company to be bubbling up. Because when you have too much capital in the early stage, everyone is doing it, right? And so, I mean, like I joke about this and say, well, people don't write a line of code. At one point at the peak of this bubble just ended, you get a $12 million post-money valuation for like, you haven't done anything, right? So it's so hard for investors to say, what am I investing into? But the market is so hard. If you don't play, somebody else will play it. I think in this case, this is great. So we have a chance to take a deep breath. In the long run, it's actually better for the entrepreneurs. They find better partners. And then you see such quality of deals. So I would, because we meet every day at 4 o'clock, I said, oh my God, this company is so good. It's so much better than all the other 17 companies we saw in the last 2 days. And you can tell. You can almost taste it. So that's crucial, right? So the quality is everything. And I'm so glad that it returns, right? It's so gratifying to be able to meet entrepreneurs that are so good in what they do. That's just great, yeah.
So Alfred, can you share these companies, these awesome companies you've seen? We'd like to.
Oh, absolutely. Remember, we are seed to A, so I do need follow-on. So Quinn, you're going to get a lot of calls from me and say, wow, this is an incredible deal. By the way, all the stuff that we do still touches on the network so much. Privacy and security is such a core and center going into the future. So all the things that we used to rely on to be physically securing anything, that's out the window. So now we really need very, very, very good security.
Great. Well, I guess we're coming to the top of the hour. I just wanted to ask everyone one last question before we leave this webinar. So Alfred, amongst your investor colleagues, what's the one thing they really should do tomorrow?
There's no doubt you have to have a thesis. You have to have a conviction what the world may look like in 10 years. So you must believe all these tele stuff is actually going to be happening. Once you believe that, then the rest of the things you'll be able to see to pick companies will be trivial. If you don't have that thesis, you don't have a picture of what the world looks like, it's hard to build a company. It'd be impossible to invest in a company.
Guenia, top tips for founders and startups now?
Oh, there's no doubt clear, right? But clarity is super critical.
And for me, it's more or less on this side. You know, it's a little bit generic, but I think, you know, be clear about your goal and where you want to be in 10 years, but be very, very flexible about the process of how to get it, because whatever we knew before may not be true now. So we need to be very flexible to survive the short term and be able to build this long-term goal.
Okay, so clarity, Quinn, but who's going to come out the strongest?
Yeah, so I would say founders, entrepreneurs, I think they got to come up with solutions that solves a problem in a unique, differentiated way, and then can quickly adapt to the challenges we're all facing today. I think if the company is able to deliver a very strong value proposition to its end customer in a very, very differentiated way, and be able to scale the business, will be very strong companies in the long run.
Wise words. So with that, I wanted to say thank you to everyone. I was Ed Barker, Head of Strategy at the GSMA. We're just about surviving this crisis. We have Alfred Chuang, General Partner of Raise Capital, who's thriving in this crisis. Quinn Li, Global Head of Qualcomm Ventures, who's looking to invest in 5G and the new winners coming out of that. And Guenia Gawendo, who's the Global Head or MD of Telefonica Ventures, who I think has a winning proposition with connectivity. We all need your product. So thank you very much, everyone. Hope you enjoyed the conversation. It's been a pleasure to join you for this last hour. And thank you for Edith for sorting this out. She's disappeared somewhere, but I believe this will be available as a recording to everyone who didn't catch everything, and it will be up online shortly. Thanks to all the attendees as well.
Thanks, Ed.
Bye now.
Thank you, Ed.
Bye.
Do the Zoom wave.
Bye-bye, everybody.